If you want to finally get consistent results as a trader, you have to know what trade you're making. This seems obvious, but the reality is most traders don't have clarity on the type of trade they have on, which means that they don't know the ideal entry or exit rules they should be using. And this can make all the difference of whether you're consistently profitable or not. So stick around to discover what the 3 types of trades are and what rules each needs to be executed properly for much greater consistency.
Today we're going to be talking about a concept that we have fun with on the desk, but it's actually really important. That concept and that approach is you really have to know what trade you're making. We're not talking about setups. We're not talking about, information that's really unrelated to trades. We're talking about specifically knowing what trade you're making. And in this, we're going to define exactly 3 types of trades that we make on the desk every single day. And then Garrett and I are going to talk through those trades and kind of have a little maybe debate, but definitely a discussion about different ways to execute those trades and times that you should be executing one of those trades and times that you should be kind of executing the other ones. At the end of this, the reality is there's a little bit of a personality trait that goes into each of these. And we have 8-figure traders on the desk that are scalpers. We have 8-figure traders on the desk who are move-to-move traders, and we have 8-figure traders on the desk who are trade-to-hold traders. So there isn't really a right solution, but there's probably a right solution for you. But in every trade, you still have to know exactly what trade you are making. On our desk, we talk about 3 distinct types of trades, and Garrett's actually going to cover them for us.
You can see on the screen right here that the first one is a scalp, the second one is called a move-to-move trade, and the third one is called a trade-to-hold. So these are 3 different time frames, but for me, the most important part, more important than the fact that there are 3 different time frames, is that they're managed differently. So when you get into a scalp, your mindset in terms of how you're going to get out of the trade is completely different than when you get into a move-to-move trade and the trade-to-hold. So there are different objectives. The scalp is going to be the lowest time frame trade, and for me, it's often based on the tape. Okay, and I recently did a video about my screen setup, and we talked about the tape, and I explained that for me it's my lowest time frame. So I think of it almost like a chart. It's just the lowest time frame, right? So for this trade, the reason that I'm going to get in is often the same reason I'm out, right? Like if I see a buyer on the tape, and that's my reason to get in. If that buyer is gone, then I'm out. And it's as simple as that. Like I don't want to overstay my welcome. I don't care if it's 3 cents or 50 cents. The reason to get in and the reason to get out. Move to move trade, that's intermediate for me, right? It's kind of like a mix of both where it's a momentum trade, right? I might have a chart pattern and I might be looking at the tape. It's a combination of things, but because of certain dynamics in the market, I'm not looking to overstay my welcome, right? So I want to capture that momentum. Maybe it's a measured move. Maybe I have a target at a price level. Maybe I'm just looking to go as long as I see buying or selling on the tape. But if I see a trend break, if I reach my objective, if anything kind of changes and I get that move, like I'm out. I'm not swinging it. I don't want to sit through adverse moves, okay? The third, the trade to hold, that's going to be the higher time frame trade, right? And for me, that could be intraday, it could be overnight, like it doesn't matter. But the point is that I'm willing to sit through some pullbacks. And the reason for that is because for this trade, it could be based on a chart, but it's also like I've got a thesis behind this trade. I've got a bigger reason why I think price can go from A to B, and so therefore I'm already deciding that if I get up in the trade, it's okay to give back some to experience this thesis that I'm thinking about.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
A lot of what we talk about when we're debating these trades is what Garrett alluded to, the expectation for each of them. And the reason why I'm using that word specifically is that's where a lot of the mistakes tend to happen. And if you're having inconsistency in your trading, you do really want to look to see if you're making a scalp trade, are you expecting maybe it'll turn into a move to move? And so you're like giving back on a scalp because you're expecting maybe it'll go a little further, even if your reason to enter the trade is no longer, and your reason to exit don't fit the criteria anymore. Are you expecting more out of the trade than what's being offered? In a move to move trade, are you managing it actually like a scalp? Or are you managing it more like a trade to hold? Because your expectations are, oh no, what if this comes against me immediately? In a move to move trade, that can happen. If you're managing it like a scalp, you're actually going to underperform in that trade. In a trade to hold, if your expectation is this could go significantly in my favor, but I'm going to manage it like a move to move, or I'm going to be worried about it like a scalp trade, you're really going to underperform across the board. And even worse, if you turn one trade into a different trade, you're probably going to not perform on the initial trade and then really underperform on the trade that you were hoping it turned into, and maybe even resulting in a loss. So the expectation going into each needs to be clearly defined, and that's kind of what we're talking about here too. Garrett made an interesting point when we were talking before, and scalp really doesn't mean just intraday, reading the tape, you're in for a defined period of time. You had an interesting point about higher time frame traders, and I think really we should address that here. If you don't mind sharing, like for a hedge fund, a scalp might be.
Yeah, like so. If you're a swing trader and you're holding for months, like I've had swing trader guys like come up to me and be like, yeah, after 3 or 4 days, I scalp some out, right? So like, and for someone that might be their total swing trade,
Yep.
right?
Yep.
So it's all about perspective. It's subjective. It's really relative to what you're used to doing. But for whatever reason, I'm sure that he had that same mindset for those 3 days. Like I got in because I thought this was an inflection. We got kind of like that initial move. Yeah. And then I saw like something slow and like, I'm going to get out of whatever that is for me, that scalp portion.
Yeah. And that is part of the core philosophy of when we're building our playbooks. We're executing on those scalps. We're allowing those move-to-move trades to happen. If we're putting together a trade-to-hold idea, we're building a bigger thesis behind that trade. We're never putting on a scalp hoping it turns into a trade-to-hold. We're never putting on a move-to-move trade thinking I'm going to scalp out of it. You're really building the independent theses behind each trade and allowing the price action to guide you in each of these circumstances. There's a lot of like kind of learning that's involved, but this is such an important concept because if you're having variability in your trading or if you're underperforming relative to your expectations, you really do want to break out. Am I underperforming because I have edge in my scalp trades, but I'm turning them into move to move trades, or I have edge in a trade to hold trade, but I'm scalping out most of it without a real reason to sell. You really want to break down what is my edge within each of these, and that can be a guide in showing you where your edge exists as a trader. Also, different markets offer different edges. If we're in a high volatility market, you're going to want to scalp more. You're going to get offered more scalp edges. The market's going to reward you for that. And it's actually going to punish you more for trade to holds. Or it's going to punish you more, maybe not for move to move, but if you overstay a move to move, it's definitely going to hurt. In a slower, lower volatility market, you're really only going to be able to capture really great risk rewards if you're in a trade to hold. Move to move trades can work there as well. But, the trade to hold is really, really, if you're in a slow, grindy market, that's what the market's going to reward. So you do want to adjust your playbook accordingly. And the best traders on our desk have fluidity to do all three of these types of trades, but they really are specific with where most of their edge comes from. And they get very, very good at the reasons to sell for those trades in particular. We have a couple examples here, and so Garrett's going to talk us through these, and I'll just kind of jump in with some points of what I see and maybe some ideas on how I would trade it.
Yeah, cool. So, the first example I chose was the CPI day recently. I think it was 9/13. And the reason I chose this was because, well, first of all, I think it was a huge opportunity. So it's a great example to kind of get into because I think these were very real, valid trades. But also, it had all three in the same day. So you have one trade idea, and I saw a scalp, I saw a number of move-to-move trades, and I saw a trade to hold. And so I just think it's a really good example to kind of get at all of these things in like one trade idea. So, this was the day where we ran into this CPI print at 8:30 in the morning.
We were up like 10 days in a row, like up a lot off the lows. Like it was, we're shooting this in October 2022, where volatility in 2022 has been very high, and we've been in a bearish market where rallies have been sold. So we had a really good setup coming into this.
Yeah. So it was bought into this, and then the print, the CPI number was hotter than expected. I think it was like 6.3 instead of 5.7 or 8 or something like that. And so what you're looking at right here is the pre-market where it says short, and you see that huge red bar. That's when the number came out. Okay, and so I think it's very hard to look at this chart and necessarily like just see a trade because like we talked about before, like a lot of this is based on the tape, right? And I'm sitting there and I'm watching the tape, and I wish I had the tape for you guys, but I don't. But one of the key elements of this trade, the first one is the news. Okay, the second one is the fact that the first move was up. Okay, you can see the wick above where this candle opened at 8:30. Yeah, and for me that's very important because price already tried to go higher, and in my mind I'm like, this is hotter than expected, like we should sell off. And so once we have that out of the way, when it comes back through the 8:30 print, gets below, now I'm looking at, okay, like what, and I already have this prepared, but like what levels do we have below that I like care about, that I think are important, and I'm going to watch the tape at these levels, and I'm expecting big selling to come in. I didn't know the move was going to be this big. I had no idea. This was bigger than I thought it would be, but I thought that there was a scalp there because of what I saw on the tape. And so the irony in this is I think this move was probably bigger than any of the move-to-move trades in the morning, even though this was a scalp.
It was, but exactly what you said. The core principle here was you knew which level could be defended. You knew what you were looking for in the price action. That level wasn't defended at all. In fact, it was more aggressive selling at that level than should have been there. So you got a really good high probability scalp that level that was potentially important was not going to be supported. There were sellers that were just walking through that and they didn't care. That is a high probability scalp. You're putting that scalp on. You have no idea how far it's going to go, but you're also not just taking it off for 10 cents or 20 cents because you're like, oh, wow, that felt good. You're actually listening to the tape, letting the momentum slow, because that's why you put that trade on, right? You put the trade on because the momentum was going to carry this right through that level and not care. So you're going to make that momentum slow before you take your exit. We didn't really realize that momentum wasn't going to slow for a significant amount of time, but that's the important thing about this scalp is you don't put an expectation on how long that seller is going to be there or how aggressive that momentum is going to be. You just know that you see it, so you take that trade.
And you can see my executions on the left, that chart that it was inserted, right? So that was the actual trade that I took. I think I could have been earlier, but that is where I hit it, and I think that had a lot to do with what was on the tape, right? So it's like on the chart, I think I could have been earlier, but there was something significant there on the tape, right? It was a pause, it was a failure to go higher, and then a bid drop.
It was below a level, couldn't lift, bid drop, all that stuff. Yep.
Exactly.
All the things that we talk about that are just fundamental good trading, like core values.
And the lines on the chart there are the previous day's high and the previous day's close, which are very close to each other. So that was a level that I was keying in on, because I thought that if we were going to be strong off this print, I mean, we definitely shouldn't go red, and we definitely shouldn't get inside the previous day's range since we're gapping up outside of it. So I was basically like hitting it through that level, and I expected selling to come in. Like if this moved against me, I was going to be out. I was just going to pay the offer, right? So, but as long as the aggressive selling remains, I want to stay in, right? So I get a first big flush, I'm going to cover some because it's very fast trade. You never know what's going to happen. I get another flush, I'm going to cover some, but you can see how like my last cover really wasn't until the whole thing slowed.
Yep. You
Right.
weren't out of the trade until the momentum was dead.
Yeah.
And at that point, you've made a really, really good trade. Really good trade. So, okay, let's talk about the move-to-move trade within this. Because I thought that was a really interesting trade as well.
Great. Yeah. So this is once the market opens. So the beginning of this chart is at 9:30, and there are two move-to-move trades here that you can see, and they're very similar. They're kind of like the same trade. And someone could argue, hey, the market trended lower all day. How come that first trade wasn't just a trade to hold? Like you would have made more money. It's like, well, I didn't know that it was going to trend yet. Like I knew that there was a chance, but look, I mean, we just saw the drop that we had into the open, right? So it's very likely that my trade might start to work, and then we completely reverse and bounce, 6, 7, 8 points for all I know, and then roll over. So I'm still getting a feel for the kind of day we're having, like how the order flow is going to be throughout the day, and it's very early in the day. So for this kind of thing, with how much we're off in the pre-market, it's a little early for me to just kind of put on a trade to hold and close my eyes. And so I'm going to play the momentum to the short side as long as I'm seeing it, and then I'm going to get out when that momentum stops, and then I'm going to look for the next one. And so we're just looking at consolidations and then breakdowns, and it's as simple as that. And I'm not necessarily hitting the breakdown. I'm watching the tick at those resistance levels, and I'm watching the tape at those resistance levels as it comes back into the morning range, comes back into VWAP. You can see on that first one, it kind of took out the previous swing by a little bit and then got heavy. Like that's something I want to see. So I'm going to be trying it at those spots and then looking for, pretty much a measured move, right? Like one move down, get out, collect the profit, look for the next one. And it was kind of like a rinse and repeat process.
Which also, the reason why you don't scalp a situation like this is because of the potential. You're managing your risk tightly, but you're respectful of the fact that it's probably going to wiggle a little bit. And also, even if it does start to work, the potential of it really kind of even pausing or doing what it does in that second example where it actually retraces, you're welcoming that in a move-to-move trade. You won't let it go all the way against you. You're not going to let it reverse. But in a move-to-move trade, you're thinking, this has a reason to continue on. So I'm not just going to scalp out of my entire position. I'm actually going to be okay if it moves against me within the right reasons. So if you're in a trade and it pulls back, if you're long something and it pulls back, but it pulls back within the right reason, in a move-to-move trade, that's often the best opportunity to add to your trade, looking for continuation. In a scalp trade, you want to be out before that pullback even happens because you don't want to ruin your risk reward. You don't want to take off. But this is a move-to-move trade, and it's a good example, or two good examples, of one that just kind of works and doesn't really give you a spot to add, and another that actually gives you a really nice opportunity to add because you're open to that potential.
Yeah, that's a really good point too, Jeff, because I mean, often I might hit out if it gets above, a previous swing, just to protect my risk, and then see that the tape's really heavy there and get right back in.
Yep.
And then maybe I'll add some because of that.
Yep.
Some more, right? So I'm kind of working my way into a position versus, seeing something super specific on the tape that just kind of gets me in at this like very specific inflection point.
Which also you would be out if you saw that super specific thing fail to continue on. With this, you may see something that gets you involved, but you're more open. There's a little more openness to what can happen and how it can play out. You still have hard rules for when you're out, and you still understand and identify your reasons to sell. But there's a little more openness to how it's going to play out.
And I don't want to overstay my welcome.
Yes.
I mean, this is probably like one of the biggest mistakes that I will make in volatility is I will be on the right side of the trade and I'll get confident and I'm thinking, oh, I know where this is going to end up. And they find a way to shake you out eventually, right? So, or you give the whole trade back, okay? Kind of like Jeff was saying earlier. And so I think it's just so important to really understand, when are we playing move to move? I mean, it's like one of the key things about all of this, I think, because move to move is kind of the middle one. Yeah. A lot of times it's the most elusive, right? Because you're either like scalping and you're totally just being nimble and you want to take profits, or you're like, oh, this is a home run, I'm going to hold forever. Sometimes move to move is like the hardest thing to mentally do because you're being patient and you're getting this nice move and then you're just parting ways with it.
Yep. And you're not, like you said, you're not overstaying your welcome. As soon as you have a reason to exit, a real reason to exit, you're done. And it's a weird feeling because you're done, but you know that the move might turn into a trend move, but you also feel good that you just didn't just scalp it and miss out on that extra 2 or 3 points that it really could have gone. So you're right. Psychologically, it's a weird space to live, but it's also a really good space if you can understand it, or if you're a little bit, and I don't mean this in a bad way. I actually think it's a little bit more of a methodical thinker. I was going to say slow thinker, but that just sounds bad. But you're a little more methodical thinker. Like people that like to play chess, I think are often good at move to move trading versus people that like to play blackjack, or people that like to play Texas Hold'em are probably a little better at move to move trading than people who like to play blackjack or stuff like that, because it is that middle ground where there's a lot that can happen and it's always shifting a little bit. So you have to stay with the narrative. But as soon as that trade's over, you have to be done. You can't sit there and say, oh, this is going to be awesome, because you will give back your profit very quickly.
You can't care.
Yes.
Yep. The last trade, you could see I got out kind of when the trend changed a little bit. The tape probably looked different there, but it kept drifting lower after that. But you can't care. And I think one of the things that helps is I know on my team, in the AM meeting, a lot of the guys will kind of just say in the morning ahead of time, I'm looking to just make move to move trades today in XYZ, because they've already identified a particular market environment where they know that that's how they want to trade. And they're almost saying that to hold themselves to that.
Yeah. And it primes your mind to not get caught in a scalping mindset and not get caught in this idea that you're going to hit a home run. Because honestly, look at the second trade you had. You executed it well on entry, and then you had an opportunity to add, and that turns into a really, really good risk reward situation. So that's the sort of trade that you can honestly make your day, your week, your month on just in that trade, because it offers you a really good trade initially, and then it offers you a really good spot to add. So you don't want to undervalue it by just scalping it, but you also don't want to think this is a trade to hold. I'm going to make my month on this if it's not being offered to you. So I really like the breakdown there. And then finally we have a trade to hold.
Yeah. So this is, again, the same day, and this is the whole day from 9:30 to 4:00. So you can see early in the day kind of where we just were making those move to move legs, right? And the market had come off a lot. And so I thought there was a high risk of bouncing. So at that point, that's why I was just playing move to move. But now we get this 2 to 3 hour consolidation in the middle of the day where the market has a lot of trouble bouncing. So that bounce that I was afraid of is not happening. And so I'm getting so much more information at this point. So another ironic thing about this trade is that the trade to hold comes at lower prices. The scalp came at the best price and the trade to hold is at the lowest price. Well, how could that be? I think it's context. I think at this point, there was just so much more in my favor pointing to the fact that we were having a trend day. The breadth was terrible. The internals were getting crushed and they stayed crushed. and we went sideways. We couldn't even hit VWAP. We went sideways for 3 hours, and at the height of that pullback, kind of near my entry, we had a tick that was the highest tick of the day. And for me, like that's huge, because that's an instance where you kind of get to see the exhaustion a little bit. You get to see like where buyers are kind of doing all they can, or where the most shorts are.
They're
getting
doing
stopped
everything
at.
they can to chase it up, and they're doing everything they can to force shorts out, like you said, and they still can't even get it to VWAP. That's, and we could flip this chart around, and you would see the exact same chart in strong uptrending moves.
Yeah. So, it's a little bit of a higher time frame because the consolidation that we're playing now, I mean, this is the same 1 minute chart, but like you could probably see that consolidation on a 15, 30 minute chart.
Hourly chart, you could see it. Like it would be very clear. There's a term that's used on the desk of intraday trend trade. This would be a good trade to hold is a lot of times just an intraday trend trade. So that's, just to clarify that term as well. But yeah, I mean, so everybody can clearly see the differences in these. And, later on, we're gonna get you back in here and we'll have you talk about the reasons to sell for each of these, because they're very different reasons to sell. But today we at least wanted to introduce the concept. And you really do need to make sure you're understanding which trade and which type of trade you're making, and not turn one trade into another trade. So finally, we wanted to talk about 3 of the biggest mistakes that you have to avoid. Know what trade you are making. It's very easy, and we've spoken about this a lot. It's very easy to say, I'm making a scalp trade, but you actually have a move-to-move setup. Or I'm making a move-to-move trade, but you actually only are offered a scalp trade. You really need to know what type of trade you are making.
Yeah, don't switch a trade up, put on a new trade. It's like, it's the old thing, like don't, what do they say? Don't let a trade turn into an investment.
We have a thing on our walls that says, don't let your swing trade get in the way of your swing trade, right? So Swang is one of the fastest traders on our desk. And anytime Swang would start to try and swing trade, he would get caught up in that switching up the trade in the middle of it, right? So like, that's exactly, don't let your trade turn into an investment. Don't, all those things are really true. So,
and I think that's not to be confused with the idea that a scalp inflection point can be an unbelievable way to segue into a longer term trade to get amazing risk reward. That's a different concept.
I'm glad you made that point. That is a totally different concept. Or you can initiate a trade to hold as a scalper. Everybody, when they enter, it doesn't matter if you're the biggest hedge fund in the world putting on the biggest position ever. When you initiate that trade, you are initiating at the lowest time frame possible, because you're initiating that trade in the moment. So every time that you have an entry, you are entering as a scalper. But you have to understand what is going to get you out of that, what's your risk reward in the trade, what's your expectation for the trade. All of those things are identified if you say this is a scalp trade, this is a move-to-move trade, or this is potentially a trade to hold. Because the reasons that get you out of every trade are totally different. And they should be totally different, because your expectations for the trade are totally different.
Know your risk personality. Don't make a trade that is not you. So yeah, I mean, there's multiple ways to express these trades. And I mean, I think that was just how I chose to see that. And that works for me, like looking at those trades in that way. I mean, quite honestly, like someone could have made that last trade that I made as a move-to-move trade and just done absolutely great, because that trade actually trended anyway. Like there was really no reason to get out. You might have made it as a move-to-move trade and gotten out at the same point. Someone might have entered on that CPI print, had a way bigger thesis about the fundamentals and wanted to trade that inflection point on a higher time frame, and maybe for them that was a trade to hold. I don't know, but there's not one way to do it, and I think that it's just important to align it probably with your personality, your your risk tolerance and stuff like that.
If you're somebody that doesn't like to hold things against you, don't try and be a trade to hold trader. If you're somebody who likes to get that immediate payoff, feel good, and you can just move on and shut yourself off from everything else, scalping might be exactly what you need to do. If you're somebody that's just building your trading skills, scalping's a really, really good way to just build trading skills, because you just get the opportunity to make more trade decisions faster than if you're doing move-to-move trading or if you're doing trade-to-hold. So, you really do want to respect your risk personality. We encourage traders when they're new and developing to try each of these trades. We talk about each of these trades in different ways on the desk because it's important for people to get exposure to them. We're very respectful of the fact that these concepts are they can be abstract at times and you can get caught in between them a little bit. But the reality is the payoff for getting these right is so high in trading that it's worth kind of doing the work to understand what you're doing as a trader. If you're constantly scalping and making money, don't try and go to a move-to-move trade, or don't try and go to a trade-to-hold right away. If you're constantly thinking higher time frame fundamentals, understanding the bigger picture story, you probably don't want to try and scalp something, because that's not really your personality, and your fundamental reason for entering the trade may not line up with the scalp that you're taking out of it.
Okay, so now you know how to define the type of trade you're entering much better. And you know how to execute that trade with solid, proven rules. And while that's a big step towards consistent profitability, it's not enough. To be consistently profitable, you need something else. That's absolutely essential. To discover what exactly that is, check out this video we shot for you that's appearing on your screen now. You don't want to skip this one.